Today we're going to be looking at the end of a downward trend. This is very similar to the last video I just did, except in reverse. We have our 15-day, 15-minute chart. We have our Fibonacci retracement set. So we just set alerts at these different levels and then wait to see how price acts off then. And we're going to zoom into these last 2 days here. We might even go to the 5-minute chart for this. So just looking at this, we can kind of see we're making lower highs and higher lows. So we want to see how downward swings are in relationship to other downward swings. So let's measure this first downward swing and project it off this high. Okay, so you can see we don't make the full 100% because we're making higher lows, right? So we kind of make the 618. And if we activated this drawing and moved it off of the next high, now we're only making the 28.2 band. So that shows us our downward swings are getting smaller, but we're still getting rejected by the VWAP. But we are holding the cone formation. And then we push up and we activate this drawing and we'll pitch it off of this high. Now here's what's interesting. We are only making the 28.2 again, but our upward swings have shifted in dimensions from only going to a small one here to a much larger one here. So we have larger upward swings and smaller downward swings. Now here's where the VWAP can be our friend, because now it's acting as support and it's starting to point up. So instead of rejecting price action here, now the VWAP is starting to move up and we're bouncing off the VWAP. So price above the VWAP is generally a good thing. Not always. You can't use that as a sole indicator for just buying on the VWAP bounce. But we've just come out of a large sell-off. Our downward swings are getting smaller. We're making higher lows. And the 8-day does not cross over the 20-day. So it goes up, comes down, but then starts to diverge. So this could tell you an upward trend is starting to happen, especially after this giant sell-off. And we're at the 47.5 retracement. So all those things coupled together could tell you that we're starting to move into an upward trend. Now I noticed the price of the, I think they were 33.20 calls here were 21. And up here somewhere at the end of the day they were 32. Or at the high point of the next day here, they were 60 or 80. So that would have been a giant move. And if you just wanted to look at how you could find some low to high swing, measure it off of here, and you could see you make the 1282 extension, and then you start to pull back. So on that pullback, you would have activated this, moved it off of here. So if you're closing out profits systematically on the way up to go from 21 to 32, you could have made some decent money, like over $1,000 per contract. So you would have closed out profits systematically on the way up, and then you would have had some profit to take a swing into tomorrow, and you see you easily make the 1282 extension again. So again, systematically closing out profits on the way up would have been a really decent move. So that's how you can use Fibonacci retracements, Fibonacci extensions, and relationships in swings along with the VWAP to help you assess the situation. Plus, this little wedge formation would have been very useful to show you how price is kind of corkscrewing and getting tighter. And that can lead into a breakout.